Hi everyone and welcome. It's Steve Johnson, Chief Investment Officer at Forager here. She managed to wrangle her way out of our annual roadshow, but Chloe Stokes is not getting off this week. She joins me for our weekly video. Hi Chloe.
Hi Steve.
Look, reporting season's only just getting underway here in Australia, but in our international fund, it's been underway for a few weeks now. What's been happening in the portfolio?
So far, so good. You talked about Celsius at the roadshow, and it's since reported some great results. Revenue was up 86% in the second quarter compared to last year, and we still think there's a lot of growth to come. One of the new investments that Harvey spoke about, Open Lending, also reported, and that sounded very upbeat. And the larger stocks you mentioned, like Zebra Technologies, have been reporting really resilient results.
And what about in your world? A couple of European stocks that you cover in Wiz and Lloyds Bank have also reported. Presumably those businesses are a bit more affected or much more affected by the economic backdrop.
Yeah, I've been busy with reporting as well. So Lloyds is the largest retail bank in the UK. They reported their second quarter results at the end of July. It was largely what we expected. However, there was a huge provision for loan losses. It was around £2.4 billion. Most of that provision was to adjust for updated macroeconomic forecasts rather than Lloyd's loans going bad. It's not without risk though. The UK government is still providing a lot of stimulus, so none of the banks really know how many of their customers will be able to continue repaying their loans once they no longer have that support. I'm expecting some more volatility from here, but the stock is trading at less than half the value of its net assets, so we're willing to stick it out.
You've mentioned a couple of new stocks there that we've recently added to the portfolio. We're up to something like 25% of the portfolio at the moment. New ideas that have been added in the past 3 months. I said on the roadshow, it's been a particularly prospective environment. Another one that you've brought to the portfolio is US listed online fashion retailer Farfetch. They reported their results this morning. I assume you've just been digesting that, but what did you make of it?
So I only just got off the call. I haven't had too much time to take it all in, but it looks really good. Revenue growth is great, and the business model is holding up really well throughout COVID. It's super resilient.
Now, I touched very briefly on it in the roadshow, but the people that are familiar with this brand Farfetch probably think of it as an online retailer. Maybe a lot of Forager's clients and watchers of these videos have never even heard of it. Can you just give us a quick summary of what the business does and maybe the key difference here between it and a normal online retailer?
So it's the global luxury technology platform, and what it does is it connects luxury brands with millions of consumers from more than 190 countries around the world. The difference is that for a large portion of their revenue, it's third party, so they don't actually take on any inventory risk. They have thousands of sellers, brands, and boutiques around the world. And those brands and boutiques are in all different geographies. They have the inventory risk, and they're actually responsible for packaging and sending the products out. So during COVID, the resilience of the business model was really proven because when certain countries were shutting down, others were still open. So Farfetch had very limited disruption to their services.
Yeah, it's a really interesting platform. And I think it's one, I listened to a great podcast recently on Invest Like the Best thinking about how some of these models may be very different from what we've seen in the past and thinking about how that impacts the total addressable market here. Yeah, the stock it's run up a lot since you first put it into the portfolio. It probably looks expensive based on, the growth that you can see over the next 3 or 4 years. But I think both you and I think this is a business that can grow for much, much longer than that.
Yes, definitely. So I think they're broadening their definition of the luxury industry as well. They're moving into sneakers and even, super high class loungewear. So they're broadening their consumer base and their product base. And I think there's plenty of runway of growth to come.
Yeah, maybe we can take out necessarily the luxury word and just call it expensive. They sell expensive stuff.
Maybe.
Okay, thanks a lot for that, Chloe. And thank you for tuning in. We were talking a lot at the roadshow last week about the prospects for this portfolio and how excited we are about it. I know we don't do a great job on the selling side of things, but We are particularly optimistic about this portfolio at the moment. We think we've got a really good balance here of high quality growing businesses that we've been able to pick up at attractive prices and still having a lot of exposure to a value and economic recovery here. I know a lot of people are looking at it and feeling like they've missed the boat. We're still pretty optimistic that there's a lot of returns here, and you may be sitting there in another 12 months thinking you've missed the boat again. So if you're looking for international exposure, get in touch and talk to us more about how to invest. Thanks again for tuning in.